Hey, what's up, guys? Dustin here with Master Passive Income. I wanted to give you a tip on using your IRA money to invest in real estate rental properties. Now, I strongly suggest that you pull your money out to invest it in real estate rental properties so that you can have passive income coming in. That's how I was able to quit my job, is because I cashed everything out. But I want to give you a tip on, or basically 3 different ways that you can utilize your IRA to invest for rental properties and cash flow. So quickly, 3 different things that you can do. Number 1, you can cash it all out. You can literally cash all that out, put it in your pocket, so that you can then buy rental properties that make you $250 a month. That's your one option. Now, the downside is you're going to get taxed all at once, like the taxes and the fees and all that sort of stuff. You're going to get hit all at once. Maybe it's going to be a 15%, maybe 25%, somewhere around there, but call your accountant to see how much you're going to get hit with, and because of your tax bracket and all that sort of stuff. Now, I personally cashed it all out, and I'm so much more happy because I was able to quit my job because I had enough properties in my investing business so that I had so much money coming in. Now, the downside of not cashing it out is you don't have that money coming in your pocket. Now, this is another option, is if you were to use a self-directed IRA. So instead of putting your IRA money into a custodian who's putting into stocks and mutual funds and stuff like that, instead of doing that, you can do a self-directed IRA. Now, this self-directed IRA is basically a place where you can't touch the money physically, like it doesn't go in your pocket. It goes, all the money, you would shift it from the IRA that you have now, give it to this other custodian who does self-directed IRAs, and then you would then utilize that money to buy the properties, to pay for expenses, to do all that. It's basically, you're running your business out of your IRA, but that money never goes in your pocket when it comes back in. So all that passive income goes back in your pocket. There's a lot more paperwork, there's a lot more things to do, and the downside about this is you don't get to touch any of that profit until you actually pull it completely out or you retire. So that's a downside, but you might be in a place where you don't want to hit with fees, you don't really need to do it, but you would like to use that for future investing, which I completely understand. So using a self-directed IRA, and look in the notes below, and I will show you a place that I personally suggest that you should go and use a self-directed IRA custodian, but find your own. Talk to your accountants, look for other people, but this is who I suggest, so I'll put that in the show notes. Now, your third option, which is probably, in my opinion, one of the better options if you're really worried about the fees and taxes. Let's say you have $50,000 in an IRA. Now, that $50,000 is sitting there being used by a mutual fund for whatever, but instead you wanted to use that to buy investment properties that puts money in your pocket every single month. Now, let's say you had $50,000 and you found a property that you needed $25,000 of that dollars in order to buy this property. It could be buying it for cash, it could be using it for a down payment, or whatever it might be, or even for repairs on a property. Instead of cashing out all that $50,000 and getting taxed all at once and having the fees all in that $50,000, just take out the $25,000 that you need, put it in your pocket, you're going to get taxed on that, and then implement that into your business, buying a property, fixing it up, whatever it might be. That's another option or another suggestion that I would actually say is one of the better options rather than cashing it all out if you're worried about taxes and fees. Now, I cashed it all out because I knew I had so many properties that I could buy, and I didn't want to wait, so I just cashed it all out and boom, just bought. So now I have 35 plus properties, or around there, 35 or more properties, and I don't have mortgages on them because I've paid off the mortgages, but I've also used my IRA and 401k. So all that money that came in from those IRAs, I bought properties with them, and I make a minimum of $250 a month. If some of them, I'm making even $500 a month on the property, and I don't have mortgages on them because I used cash, and anyways, all that good stuff. So 3 options. Number 1, cash it all out. Strongly suggest you doing that. 2 would be to use a self-directed IRA, but 3 would be the third option, would be a benefit of not using or hitting all the taxes all at once, would be to pull it out just a little at a time as you need it, as you implement it into your business. Now, above all, I want to say talk to your accountant. Figure out what's the best strategy for you, and I'm just giving you these options. If you want to put it in real estate, this is the great option for you. So I would strongly suggest that. This is what I did. This is how I'm able to never work a job. All right, guys, Dustin again, Master Passive Income. You take care of yourselves. Start investing if you haven't already. Check out my website, masterpassiveincome.com, as well as subscribe to my YouTube channel. I'm going to be putting out so many more great content for you so you can invest in real estate. All right, guys, you take care of yourselves. See you soon.